Well, the markets are open here on a Monday. I'm Marlon Bowling, your tour guide to the ag commodities, and let's go ahead and open them up. Let's take a first look at our prices. The quotes are provided by Bar Chart, and here we go. On the corn, July down 13 cents to start things off here today, and you have September corn dropping 22 and a quarter. We're at 660 and a half right now. We have December new crop down 23 and a half cents at 650 and a half. All kinds of pressure on the corn market today. Now, it didn't start out that bad, but it's been falling as we go. Soybeans, we have July down 8 and a quarter. The August contract now down a dime. We're at 15.10, and we have September down a dime at 14.35 and three quarters. New crop November also a dime lower at 14.14 and a quarter. It's in the middle of its trading range, though. From overnight, we had about a 32-cent wide trading range there. Now, on the wheat market in Chicago, first of all, we have July dropping a quarter of a cent, September down a half cent at 9.36. In the hard red wheat in Kansas City, July is now 2 cents lower at 9.90 and a half. September down 2.5 cents. Spring wheat trade in Minneapolis, we have July down 6 and a quarter at 10.64 and a half, and September down 6 cents. We're joined by Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. They're taking a huge bite out of this corn market here, Dewey, and I heard a lot of comments over the weekend where people were so frustrated why they're taking a hit on corn. They said, we didn't get any rain, or we didn't get enough to really do any good, and they need a lot more. What do you hear?
I'm hearing exactly the same thing. I've been out and I've looked, and I've also talked to several people this morning, especially in the eastern corn belt. It's where we really do have a problem. We have a lot of the corn has already started to pollinate, and I have actually seen, and guys are telling me that the corn has started to fire up from the bottom here, and that is not a good sign when you're in late June. Generally, when you have dry conditions, that usually does not occur until you get further along into July. So as I look at it right now, trade is looking at the rain that we did have. We did have some rain in areas that needed it, but it's simply a situation of the haves and the have-nots.
When we started out, we actually had soybeans higher and wheat was higher, and now they have fallen to the downside. What does that tell you?
Doesn't really tell me much of anything. We had the beans were higher earlier because palm oil was higher, so now, you know, the corn market's down, so they're kind of taking their lead from that.
Okay, well, we'll come back in just a moment. We'll take a look at our livestock trade as well, and maybe some of these outside markets here, Dewey. So we're talking with Dewey Strickler. We'll be back right after this. Well, here's a quick peek at some of the outside markets, too. On the Dow Jones Industrial Average this morning, we're down 70 points at 31,417. That would be on your September futures. A lot of interest in the U.S. dollar index, and it's down 200 points. Now down 219 on September at 103.740. Also on West Texas Intermediate crude oil, we have the August futures down $1.14 at 106.48 per barrel. On the live cattle trade, this is how we're starting. Remember, we had that cattle on feed report Friday. Well, June live cattle up half a dollar. We have the August contract 75 cents higher. It's at 134.12, and that would be the biggest gain of all the contracts on the live cattle. On the feeder cattle side here, we have August. Look at this, $3 higher at 175.50. And now you have September up $2.65 at 177.72. Big gains in the feeder cattle market. Of course, placements were a little lighter than expected. Lean hogs, we have the July up 30 cents. You have August 67 higher at 107.45. But the deferreds steady to maybe 50 cents lower if you go further out. And let's go back to Dewey Strickler and talk about this here. Big moves in the feeders this morning. Is that strictly in relation to that cattle on feed report, or what do you think?
I think it's mostly what's going on in corn this morning. It's pretty much a no-brainer.
Okay. So corn offering a lot of support here to the feeder cattle market. What does the future hold here? And if you are a cattle or a hog producer right now, you look over at the feed grain market, would you be maybe locking in some feed needs at this point?
I would definitely be looking about the corn. When I look at, like we talked during the break, the Elliott wave pattern on December corn, it shows that we could still go up and set some new highs. Now, if we drop below 615, it becomes a less uncertain. Keep in mind that corn market right now is extremely oversold, and we've got a major report here on Thursday with the acreage. So if you need to lock some feed in, probably wouldn't be a bad idea.
When you look at this feeder market technically, what do the charts tell you right now?
It just shows that we're just going to be in a trade range here. We've got some resistance up here. I think it's going to be a little more difficult to get these feeders to move up higher. It's just going to follow corn and the other livestock markets.
So do you see the same thing on the lean hogs or not?
On the lean hogs here, I can see, the exports were down last week, cutouts were down. I think that these hogs are going to meet some resistance up here, right in this, say, 111 area or higher here, basis on the August contract.
All right, well, I appreciate all the help here this morning, Dewey, and thanks for being our tour guide to the opening trade. I appreciate that very much. You have a good week out there and try and stay cool. Dewey Strickler of Ag Watch Market Advisors. He is in Franklin, Kentucky. Janet, we're off and running. Back to you.
All right.